Hi, everyone. I've been getting a number of inquiries lately as to what is the best type of term insurance coverage, term 10 or term 20. And like many things in the financial world, there's really no right answer. It just depends on what your particular circumstances are and what your needs are. But I thought it would be instructive if I gave the basics as to how term 10 works and how term 20 works. And then if there's any discussion that we need to have after that, then an individual can decide. So I'm going to use some data on a current case that I'm working on. And the individual is a 33-year-old healthy non-smoking female. And she has two young children and a mortgage that's almost $400,000. So the concern is that if she dies, that the mortgage is paid off, other end-of-life items are paid off, there's some education savings, and then some income replacement in the home. So she needs $750,000 of term life insurance because the need is only temporary. It's not for her whole life. So that $750,000 will be there in case she dies anywhere along that line until age 85, although I don't expect she'll still have it at that point. So what's the least expensive way to do it is with term 10 life insurance. And that's because the costs are very low for the first 10 years. So for this individual, the premiums are $27 a month for the first 10 years. And that's because statistically, the life insurance company knows that it's very unlikely that she's going to die in that period because she's young and healthy. So the premiums are low. At the end of 10 years, it's going to increase to $130 a month, and that's going to be 10 more years of that. Then at year 21, it's going to increase to 283, 283, and so on and so on. So it's kind of like if you rent an apartment every year, the rent increases until you move out. So 27 to 130 to 283. I don't expect that she's going to need it at this point because the kids are going to be grown and the mortgages may likely be paid off at that time. But what we're really concerned about is what happens here in this time frame. Now, it's possible that as we get to year 10, we would do a review and say, does she still need $270,000? If so, is it possible to get a new insurance policy? Is she still insurable? She'll be 10 years older, so the premiums won't be 27, but they'll likely be less than 130. So if that's the kind of if you're someone that's willing to take that risk, absolutely that makes sense to do that. Alternatively, we could look at a term 20 option. And just as the name applies, it is a level premium for 20 years. And it's a little bit more than the 27, but it's never as high as 130. So in her case, the term 20 would be $39 a month for 20 years. More than it would be in the first 10 years, but a lot less than it would be in the next 20. What happens at the end of that? Well, it's going to increase, and it's just over $300. What is it? 300, almost 400, $395 a month. Again, I don't expect we'll still need it. So really all we're looking at are these 20 years in here. So what's the difference? Well, it's $12 a month for the first 10 years. So that's $144 per year more to carry the term 10. And over 10 years, that's going to be, she's going to pay $1,440 more for term insurance in the first 10 years if she opts for the term 20. But on the other side of the difference here between 130 and 39, well, now that's going to be $91 a month. So what's that every year? That's $1,092 a year that she'll be saving in the term 20. Over 10 years, that's $10,000 that she'll save in those 20 years. So this is really where the decision has to be made. So If you're a person who wants to put their life, you've got young children at home, and you know your mortgage is going to be at least 20 years, and you never want to think about insurance again. You don't want to sit down with your advisor. You just want to get it done and forget about it. A term 20 makes sense. Also, if you're someone who there's a history of medical issues in your family, cancer, heart disease, stroke, or you may think that that's a possibility, you may want to opt for the term 20 because as we come close to this renewal, you may no longer be insurable and you're going to be stuck with having to take that $130 increase in year 11. So no right answer. Term 10, absolutely least expensive way to do it up front. It may be more expensive for you going forward if you still need that coverage. The other, and in that same scenario, if she needs, opts for the term 10, can't renew, has to take 130, we could always reduce the coverage to get it more in line with what her budget will allow. But then she may not have all the life insurance coverages she needs. So I hope this has been instructive. If you have any questions or other topics you'd like me to cover off, please let me know. You can contact me through the contact I'm sure is below here on whichever platform you're watching this on. And look forward to seeing you all again soon.